everyone. I'm Robyn Zimmerman, and this is Talk of the Town. With us once again is Steve Gaito. As you know, he is a certified financial planner, and we have some great news for you. He just had cataract surgery in one of his eyes. He can see 20/20, right, Steve?
It's a whole new world.
Well, congratulations. I'm glad you had that done. I had both eyes done a couple of years ago, and it's really made a huge difference in my life. I wore glasses since I was like 15, but today we're going to talk about taxes.
Oh boy.
I really don't want to go down that road, but we need to. Because I think us retirees think we're going to have less taxes when we retire, but that's not the case, right?
No, in fact, I just got back from a conference where the whole function or whole purpose of the conference was to discuss taxes and have an open and honest conversation. And the presenter started it off with, this is not retirement savings, it's the great American tax savings myth. And I got thinking about it. I've been doing this over 30 years. Mm-hmm. And I have yet to have a client that when they retire are in a lower tax bracket. And while they were saving it, that was the whole premise that was out there. You know, save the money now while you're in a higher tax bracket so that when you retire in a lower tax bracket, you can take the money out.
Right.
That's just simply not the case.
So Steve, what is the micro versus the macro approach to taxes? Explain that for us.
Well, I like to say, if you go in and talk to your CPA, they're going to try to figure out the way for you to pay the least amount of taxes in any one given year. That would be a micro view of taxation. A macro view takes into account all the other parts that can come in. It's you in the same tax bracket when you retire, when you have a spouse that passes away and you're now filing single, and what happens to those qualified assets when they're passed on to your kids and they have to take it out in 10 years. That creates a cumulative tax over your lifetime, and that's your macro tax.
Okay. So Steve, what can we do to be prepared as we move into retirement to avoid being taxed so heavily?
Yeah, the first is to understand your taxes and how much you're actually on the hook for. The other thing they compared it to was a bad business partner. And the reason they call it a bad business partner, let's say you went into business with a partner and they own 25% of your business. Okay, each year they get 25% of the profits. Well, the government with taxes is taking 25%. But imagine how upset you'd be if your partner came to you the next year and says, I don't want 25%, I want 35%.
Right.
Would you be happy as a business owner to have that situation? Absolutely not. And yet that's what every American faces in retirement is you need to get that business partner out. And I have a neat free offer for everybody. If you want to know what your taxes are going to be in retirement, I have a retirement tax burden report that I'll run for anybody because I think that's foundational in understanding what you actually are obligated to pay in retirement.
All right, so my final question about taxes, Steve, would be how retirement funds, like the 401k or IRAs, the 403bs, how are they impacted by these tax changes? And I know you can explain that when we talk with you, either in person or Zoom or whatever, when you're counseling us, but how are those retirement plans affected?
Yeah, so every time Congress meets, they like to monkey with the rules. And that's no way to have certainty in retirement. I mean, even, a lot of folks did a lot of strategic planning for their kids and inheriting these IRAs and used to be able to stretch it out. Well, now that you've got to liquidate it within 10 years, that changes the numbers. And all Congress did was say, oh, we're going to create this Secure Act. Well, all it did was make it insecure for everybody. And that's the reality is you don't want your retirement plan subject to the whims of what Congress wants to do on any given year. And that's the easy answer. They like to change the rules. In fact, tax rules change on average every 3 to 4 years.
So there's so much, I guess your message today, there's so much out of our control that we need to figure out and work with a planner like you to control some of those items that we can, and we need to know what we can be
exactly.
in charge of.
You got to start with understanding what your tax burden is going to be.
Okay.
And then, like your income taxes, you want to figure out the best way to pay the least amount of taxes. And that's become really one of the key elements of my planning practice is helping people understand and pay less taxes.
Okay. Well, thank you so much, Steve. I don't like talking about taxes, but we must, and we must plan.
You have to do it.
Very good. Steve Gaito, who's a certified financial planner and a partner with us here at WHHI-TV. Thanks, Steve. Have a good
Thank you.
couple of
You
weeks.
too.
Bye-bye.
All right. Bye-bye.